Boy, oh boy, that time flies when you're having fun, doesn't it, guys? Welcome back, welcome back. Hope y'all had a fantastic trading day in the markets, but time to get back to work. It is about that time of day again. It's Wednesday evening, after all. It is February 3rd, 2021. My name is Joseph, by the way, and as always, welcome back to your nightly newsletter. Now, tuning in for the first time tonight, it is great to have you with me because my job tonight is to help us get ready for the best trade setups for tomorrow. That's Thursday's trading session. I got a fantastic video in store for you guys and gals tonight. Charts are all prepped up in the background. As you can see, we got the E-minis, we got the oil, and we got the gold, the yellow metal on our radar for tomorrow. Lots of ranges on the charts. You know me, I'm a sucker for a good range, right? Buy low, sell high, focus on failures. Keep your eyes on breakouts. Got some big news tomorrow, though. Want to make sure we talk about that as well. Got earnings coming out tonight and tomorrow. So we're going to put this, we'll put this plan together tomorrow or tonight. That way you're ready for tomorrow's trading session. Before we jump in, though, and get our hands dirty on these charts tonight, I just want to make sure to remind you, we publish this video newsletter every evening, Monday through Thursday, with our best trade ideas for the following day. I want to make sure you get tomorrow night's newsletter. So don't forget to subscribe to our YouTube channel. Hit that little bell icon. That way you always get notified every time we publish something new. And also, if you have any questions for me, you can always type those questions in the comment section below. I'll get them answered as soon as possible. So don't be afraid to ask questions. And as always, I really appreciate you guys tuning in every evening and carving out some time with me every evening. If you enjoy the video as much as I enjoy making it, do me a favor, hit that thumbs up, hit that like button here for me tonight. Always appreciate you guys supporting this YouTube channel. But make sure you subscribe and thumbs up if you guys enjoy the content. Enough of the intro, though. Let's get this video going. Taking a look at the charts. We got big news tomorrow. Get some big moves possibly tomorrow as we go into the end of this first week of February. Got the E-mini, got the crude, got the gold. Everything, lots of ranges, right? We're dealing with a bull market into a trading range right now on the S&P. Really at this point on the S&P, our plan is very similar to what it was last night. We're going to keep milking this thing as much as we can get, right? I'd love to buy some pullbacks down around key support levels tomorrow morning on the S&P. And of course, I would love to try to kind of capitalize on a move going back up to retest the highs. As I mentioned in last night's newsletter, we got some headwinds overhead, some big levels of resistance up overhead. So we've got to be quite selective with the setups or the buy patterns we use as we go higher. I'll talk about how to trade the breakout, talk about how to trade the pullback. We'll talk about what a reversal might look like for tomorrow. So if you're an S&P trader like we are in our trade room, you definitely want to stay tuned for tonight's video. Right in the middle, I've got my oil. The oil, of course, got a big breakout today, right? Big breakout today. Cruising up there around that, 56 and change. And it looks like a range. It does. It looks like the market is going sideways here inside of a trading range. But I'll tell you, there's a couple things I'm looking for right now. One, I would love to capitalize on this move back up to retest the high. There's a good chance these buyers are going to try to make a run back to retest these highs, but I got a couple traps I want you guys to make sure you avoid as this market tries to run higher. You can see there's a couple levels of resistance up top here that I want to make sure you guys are aware of. I'm definitely looking forward to buying that move as it goes higher, but I got a couple things that I want to make sure you guys are ready for tomorrow. What I would really love is to get down into this 55 and 55.20 area, get another leg down and rebuild this thing back up again, right? That would be the trade of the day tomorrow. We'll see if we get it, but that's where I'm looking on the oil for tomorrow. Not to worry, I'm going to go over a lot more details of this once we get into this video here tonight. And then how about that gold? Boy, gold, gold is kind of the opposite of the S&P. Gold's a bear move down into a trading range. And of course, we're going to keep on milking this strategy as much as we can this week. Every time the price goes up, we're looking to sell it back down. I got a couple key levels of resistance overhead. Depending on how big that break higher is, we'll talk about how to trade a reversal. We'll talk about how to sell these pops. So lots of really nice setups we're watching for on the gold. And as I mentioned, we got some big news tomorrow to kind of shake things up early in the session. Let's grab a look at that calendar here real quickly. Then we'll come back and we'll dig into all of the specific chart patterns and entry patterns we're looking for here tomorrow. Real quickly here, from our friends over at econoday.com, taking a look at the news for tomorrow. Now, we are, again, as I mentioned throughout the video or throughout the newsletter this week, we are in peak week, as they call it, which, of course, is kind of the top or the busiest week of earnings season. This is the third week of earnings season. What that means to you is we have big earnings reports coming out in right after the close and, of course, before the open tomorrow. So be aware if you're trading the overnight session, if you're in Asia, if you're in London, right, or early parts of the U.S., be aware the overnight session during these earnings weeks, right, we got a couple more weeks to go of this. During these earnings weeks, they will sometimes be very unpredictable and jumpy in the overnight. So be very careful, right, during the overnight session. As we look at tomorrow's headlines here, as we look at the schedule for tomorrow, everyone's looking at that jobless claims report at 8:30 Eastern time. That is definitely going to be the big news here for tomorrow. Productivity, nah. Factory orders, nah. Natural gas, probably not going to be a very big deal. Jobless claims will be the big headline tomorrow. And that's good because it's going to get us moving early in a session that, for the most part, will probably be weighted towards the beginning of the day tomorrow. The reason I say that is because Friday is non-farm Friday. We got jobs report coming out on Friday morning. What that means is if you were working for a big trading firm, your boss would probably tell you, don't you dare put on new risk in the latter half, right? That kind of last third of the day on Thursday, right? If you're, you know what I mean? If you're working for a big trading firm, you know, some of those big elephants in the room and in the markets, big buying power, big trading power, lots of position power, they are typically going to be protecting their capital towards the end of the day on Thursday. Very big important information because you don't want to be forcing trades late in the day on Thursday. Obviously, we'll play the price action as we see it, but if things are slow tomorrow afternoon, you know why. They're protecting themselves, right, ahead of that, what is potentially a very violent beginning of that Friday morning trading session. Now, we'll talk more about, I have a pretty specific plan of how I trade non-farm Friday or the employment number on Friday, so make sure you come back and see me tomorrow night on tomorrow night's video, and we'll talk more about that. Most important thing right now, though, is be aware of that big news tomorrow at 8:30, and of course, the earnings reports coming out overnight and the pre-market here tomorrow. And as always, don't forget, we'll be in our trade room tomorrow morning, 8 o'clock Eastern time, and we'll do all this stuff together. Let's grab some charts, though, shall we? S&P's ready. Oil's ready. Oh, you know the gold is ready. S&P's ready, though. Let's take a look here at the S&P. Not a lot has changed from last night's newsletter. We have that strong move up into a trading range. And as I mentioned, our job, when the bulls have control in a balanced range, ranges act like magnets, our job is to find levels of support and buy those levels of support. You keep using that range as a magnet, right? And we talked about this last night. My favorite types of entries are failures. We wait for the price to pull back, we wait for sellers to try to get short, and we simply buy into those stop losses. Now, as we come into the end of Wednesday into Thursday, we got exactly what we wanted from last night's newsletter. Now we've got momentum rotating back up now. I would assume now these buyers, they want to take out these highs. They want to complete the pendulum swing, right? There's a little expanding triangle up there. You can see I drew up there too, right? That's going to be a big magnet here. And, of course, the all-time highs all the way up there at 38.62 and change. So right now, if I was to describe this, I would say we are a bull market into a range, and we have rotation, right? We have rotation coming off of that low. Target is to take out these highs. Target is to complete a pendulum swing. Imagine the momentum swinging down and then back up as we go. What I don't want to do is get caught trading inside the range. I want to be buying on pullbacks, and I want to be buying it as it goes higher. I don't want to get wrapped up in this range magnet. If you were to put a volume profile on this, all the volume is piled up right there, right? So we don't want to be using that as our entry point. We want to be using that as some targets, right, as we go. Okay, where are the best setups here for tomorrow? Bulls want to retest these highs. Bears have very little going for them right now, so they have to prove it to us before we go looking for any sell setups right now. Let's talk about up, down, and sideways, shall we? Because that's pretty much the most important information I want you to be aware of here. As the market goes higher, this momentum will be very strong. Momentum is fine. As I always remind you, and I talked about this last night on the newsletter, we're always asking those kind of two important checks and balances. How is location and how is momentum? As the market goes higher, momentum is great. You know, there's no problem whatsoever with momentum. Momentum is great to be a buyer. What is the problem is location. We're up around these highs. We're up above the top of that range. So I've got to be careful as I go higher. So what would be a good pattern? What would be a good entry setup, as we call it in our trade room? I'm looking for traps up here. So as the market goes higher, I'm looking for a shallow pullback, a higher high, and a trap off of that low. This is going to be my favorite setup on the way up to this trend line, on the way up to this pendulum swing, on the way up to those all-time highs, right? So that's going to be how I'm looking for it to get long as the market goes higher. Now, another scenario you want to be thinking is, let's just say this thing just rips, right? Let's say this thing really takes off to the upside and blasts higher. If we get enough strength, and obviously we'll have to see how this thing looks when it sets up, but if we see enough strength there, what I can do is I can mark up that high, I can mark up that low, and then this is what usually happens. We'll usually come back just below the moving average, which is great, because now we can try to catch sellers trying to short off the high. Remember, if we see a lot of momentum up here and those bears are trying to short that pullback, that is a very low probability trade short, and I would love to catch those sellers on the wrong side and buy right into those stop losses. Now, I know it's kind of a dangerous place to be buying, right? You're buying relatively high, but the key component is, if we have enough momentum, we know the odds of a retest of that high are very good. And because we're so bullish, if the sellers are foolish enough to get strapped in underneath the moving average, like back here, their stop losses will make for easy fuel to push right back up to retest the high, right? That's the second kind of pattern I'm looking for as we go. Now, I can definitely sell this market as it goes higher, but I've got to be very careful, right? I don't want to just try to short into, for example, major top up here, trend line up here. So as we get up and take out these highs up here, can I sell? Because after all, this range is a magnet, right? It's a magnet, right? So why can't I sell it? Well, because of momentum, right? Again, ask that important question, right? The two kind of checks and balances are going to be momentum and location. So if I have a strong run higher, I'm in a great location to sell short. But momentum is pretty tough, right? Because it's very bullish. So what's the best way to short a bull market? At resistance, always at resistance overhead. The best way to do it is I would look for a crown reversal pattern. Crown reversal patterns are pretty straightforward. They take a little bit longer than you think they would because they're reversal patterns, right? Going to kind of turn that battleship around. But here's what you want to think of. As the market pulls back, we're going to give the buyers the benefit of the doubt. Let them try once, let them try twice. And what I'm ultimately looking for here, because the trend is so bullish and there'll be quite a bit of FOMO up here, I would imagine, buyers assuming we're going to retest these highs. So I'm going to have to make sure these buyers try once, make them try twice, and then I'm going to want to try to trap them in just above that prior swing high. You can see something similar back here. We go up, the buyers try once, you see they actually try 3 times here, but see how they get a little trap above that high? That type of trap is what you're going to be looking for up here. All right, again, up around a level of resistance around the top of that trading range. So I'm looking for a crown reversal pattern to be a seller. I'm looking for a 2-try trap to be a buyer, or if it really blasts higher here, I'm looking for that what we call a failure pattern, right? Trapping in those sellers, failure pattern for a retest of that high. And remember, guys, if you're here for the first time or if you haven't taken advantage of this yet already, I teach all of these setup patterns in our free trading course. What I would do is I'll put a little pop-up there in the upper right-hand corner. If you're serious about your trading career, if you want to make the most of our time every evening on this video, definitely grab that free trading course. You'll learn all my favorite entry setups. You'll learn the traps, the failures, the breakouts, the reversals. Not to mention, I'll send you lots of examples, right? I'm just drawing on my screen right now. As part of the free course, though, I'll send you lots of examples of how we actually apply these setups on our favorite futures markets. So definitely grab the pop-up. I'll put a link in the description here for you as well in case you want to grab it there later on in the video lesson. But again, don't waste too much time. Grab that video link. That way you can register, right, for our free trading course and take advantage of it. All right. Now remember, we don't want to trade the middle. So stay out of the middle. What if the market runs lower? Now, this is interesting because you have to understand how rotation works to begin to know how to trade this thing as it goes lower. Remember, it's a bull market and a trading range. So our job is to buy support, right? We had support back there, buy it. Support back there, buy it. Support back here, buy it. But here's the problem, though. The problem is that if the market rolls over and goes lower, now we have to think of this as failed rotation. What I mean by that is we have our trading range. The trading range is thought of like a balanced market. And the amount of the move, right, the amount of the market going lower is oftentimes the amount of the move going higher. If we don't complete that rotation right now and the market takes a nosedive and runs lower, takes out these lows, what I have to worry about is momentum. Momentum becomes a big concern. It'll be a really big clue that the buyers may be not as strong as we think they are. Now, if I have, again, a good location, but I'm worried about momentum, what do you think I should do on that? I should give the sellers the benefit of the doubt. So once we get that deep pullback now, that failed rotation, right? They couldn't even retest the highs, right? So now they come crashing back down here. Yes, this is support. Yes, it's a good location, but momentum is a big problem. And when I have a concern about momentum, I want to let those bears. Now, I don't need this to be a crown reversal, but I do want to see the bears try once and try twice. And then there's a couple options as far as getting into this trade. One of them is I can buy right into the stop losses of those sellers, right? I can literally put my order right above that high and just let this short squeeze take me back up into that range because, again, the range is a magnet. Another one of my favorite ways to do this, though, is to draw a trend line across those lows and actually buy off of that trend line. That will give you a better entry, as you can imagine. And then once you hit those stops, right, it almost acts like a domino. You know, you get this nice, strong signal candle coming off that trend line. That gets you in early. Once it gets above that high, it usually snaps, right, and runs back higher. So keep that in mind as we go lower. That is a failure pattern, but because I want the bears to try twice here, again, coming off the moving average there, bears try once, bears try twice, that we call these nested failure patterns because it's a failure inside of a failure. Now, I don't want to overcomplicate this too much, but one of my favorite follow-up setups after this nested failure pattern is a trap just underneath the trading range. What usually happens in these scenarios is the sellers are so convinced they have this market, right? They try once, they try twice. Everybody's trapped in a losing position. When the market jumps up like this, we oftentimes don't get that classic pullback. Usually you'll see it pull right back right away. A lot of times, though, in these kind of nested failures, they'll snap. And so I like to look for that trap pattern, right, as we go back into that range, right? But the most important thing is I want to look for those failures, right? And then again, if we can get it, that trap as we go back up into the range. And then remember, this is a great time to take your measurement tool out, measure that, and leave that runner, right? Leave that runner up top. We'll know more once we get there, but that'd be a great place to take some profit for tomorrow afternoon. Now, as the market goes lower, at what point can I start to sell? The Bears didn't do very well there. They didn't do very well there. We don't know yet how they'll do here yet. But could I sell this market? I can, but I have to make sure the Bears prove it to me. The Bears have to hold this pullback and jump off the moving average. If I can get a 1, 2, 3 reversal pattern, that's what we call them, 1, 2, 3 reversals, I can mark up that low. What I'll usually do is put the second trend line across the top. It'll usually be a little bit above that little swing there, and that's where I look for another one of those failure patterns, right? Failure into pullback combination as the market goes lower. And again, I'm just simply drawing on the screen right now, but if you want to see better examples and the rules of these failure into pullback combinations, I cover all of that in that free trading class linked up there in the upper right hand corner. So again, as we go lower, to buy it, which I would love to do, is a nested failure pattern, or we go 1, 2, 3, and again, they've got to jump off the moving average. 1, 2, 3, prove to us, mark up that low, mark up that high, and I always have to find those failure, pullback, strength moves coming off the high of that channel. Where do we think these Bears want to go? I would be looking at 37.80 for the sell side, right? That is, if you recall, that is that big, that's that big magnet from late in January, that big kind of bloodbath magnet that we had, right, during the whole GameStop debacle, right? So we know that magnet down there, 37.80. Keep your eyes on that if we turn bearish tomorrow. Looking pretty good, though. I'm pretty optimistic for tomorrow. Got jobs early in the session. Hope you're ready now, of course, for this. And don't forget, if you have any questions, just type those questions right into the comments section. I'll get them answered for you. How about some oil? So oil is an interesting one here today. We have some interesting things going on with oil right now. Obviously, the COVID stuff, right? The pandemic has really kept oil depressed, right? Not just oil. I guess everybody's been a bit depressed about this crap, right? But the reality is now we're starting to see viruses, virus counts come down. It's at least it seems like it, right? Who knows? We've got the vaccines being distributed, all over the world right now. OPEC Plus has now committed to cutting production. There's a lot of bullishness in this oil market right now, and you can definitely see the chart confirms that. It looks like what's happened today. If I was to kind of summarize what happened today, it looks like it was a bull market into a spike in channel, and of course, If you follow my newsletter, you know that the base of that spike in channel is money, right? And that's where you want to look. If you ever see a bull market jump up, right, and then start going sideways like that, you know that the base of that channel, right, where the channel runs into the spike, and then that first pullback right there, that is usually the sweet spot. There is a lot of money to make in those pullbacks. So buyers will buy that pullback, and their target, of course, is up to retest the high, and then they'll use that leg to find the measured move, right, for the second target. So it's a very reliable chart pattern. It's definitely one of those chart patterns that will be on my Mount Rushmore, right, of chart patterns. It's a top 4, top 5 chart pattern. Everyone really should know. It's great during news events, right, like we saw today with the inventory report. So that alone to me is a really big clue. You can see that channel right there. We go up, we pull back. There's your channel. And you'll notice, right, we have this There's your base right there. We pull back, the bears fail, and now we're trying to make a run back up to retest the high. That's what it initially looks like. But then when you dig into this thing a little bit closer, it starts to smell like a trading range. This is the only concern I have, is that you'll notice we go up, down, we come back up, roll around, we end up back into this area here. So that's the only concern that I have about buying this move as it goes higher, right? Those are the two components that are going to be kind of the piece of this. The market's definitely bullish. There's no doubt about that. What we have to be aware of, though, is this range may act as a magnet. So as the market goes higher, my concern is that this big strong move down is going to roll over and make a push lower to complete the rotation, right? As we mentioned on the S&P, the rotation back in the other direction, which honestly would be my favorite spot to buy tomorrow, because you'll notice 55.26 is that prior high, and we haven't come back to it yet. It may even be honestly a little bit lower, right? Like that. So if there's one place tomorrow I will be looking to get long, 55.25, 55.25 there. Beautiful area of support. They never came back to get it, right? They never came back to get it. So that kind of virgin, level there at 23, 24 is a very, very attractive area for the buyers. And of course, major resistance overhead is in play for the sellers. So let's talk about a couple options here right now. As the market goes higher, right, what's my concern? Is it momentum? Or is it location? What do you think? It's not momentum. Momentum is great. It's a bull market. It's a strong move up. There's a good chance they retest the high, right? Remember, anytime we see a real strong move in one direction, there's a good chance we retest the high. So momentum's not my problem. What my problem is location, right? And the one easy way to solve that problem would be to incorporate. Well, let's put it this way. What's my concern? My concern is that sellers are going to come in and short right up around these tops up here. There could be like a false top up here, right? You look at it closely, hit there, hit there, hit there. So there definitely is probably some resistance levels up top there. So if I think about the bears coming in, if you kind of walk this through, right, it's bears try once, we go higher. What I'd like to do is draw a trend line off that high, bring it down to that low, and use that trend line as an area of support. What this will do is it's kind of like a nested failure, but in a weird way to use it, right? So this would be one spot to be a buyer as we go higher. You're going to have this, and remember, it's this channel is what I want to use. This trend line is just a cherry on top. All right. It's this channel is what I want to use. Now, what you got to be careful with is if this thing goes and runs really close, right? So if it really runs up like this, I'm not going to want this one. Okay. So you're going to have to be smart with this, right? I don't want to buy right into these highs up here. That's a no-no. All right. Stay away from that one. But if I can get this, to go up a little bit here, pull back relatively quickly, I can definitely mark the high, mark that low, and that's a great potential. So that's definitely worth giving a swing. Okay, so it's kind of like a failure, right? The bears want to take it lower. The bears want to take it lower. They're trying to get that pendulum swing, and I'm just simply waiting for them to get enough skin in the game there so I can pop right into those stop losses. I'm going to need those stops up top here to fuel this thing going back to retest the high. So as the market runs higher here, right? Again, that's going to be kind of the thread the needle trade as we go. Now, don't forget, there's a ton of open space here, right? I mean, honestly, even this 58.62 is not much. $60 a barrel is the next big milestone. Open up a weekly chart of oil, right? Open up a weekly chart. Where's a weekly chart here of oil? There's a weekly chart right there, right? Here's a weekly chart of oil right now, and you can see, right? You can see. I mean, we have. It's like, lift off, right? There's a lot of open space up there, and this bad boy is saying, come on in. The water's warm, right? 60, 65, 70. So obviously, I'm not ready to call 62 tomorrow, right? But I want to make sure you see, there's a lot of open space overhead. And again, with the vaccines, the COVID numbers dropping, right, the production cuts, things like that. If it wasn't for that darn Tesla, right? If it wasn't for that those darn electric vehicles, right? I'm kidding with you, obviously, but there's a lot of pros right now for the price of oil. So that's that's part of the equation up here. So how do we trade that? We trade that, again, location is a concern. So what I need to get either a 1-2 go and a trap, right? 1-2 go and trap. And this will obviously be a strong move up. It'll be a shallow pullback, right? Shallow pullback, higher high in price, and a trap low. The key to this setup is going to be a strong move, right? Very strong move. Or if we don't get that strong move, we have to get one of these: the 1 push up, 2 pull back, and 3 jump. Okay, that's called a 1-2-3 breakout. It confirms the sellers are beat, the buyers want more. And when you get that much momentum, the odds are stacked in your favor for one more leg higher. Now, again, I'm not going to say we're going to go to 62 after this pullback, but just like we saw today, we talked about this last night. There was the range last night, and I talked about this last night, if you recall. Like I said last night, if this thing goes 1, 2, 3, right, you want to mark that high, mark that low, and the first test is the best test, right? And that's exactly what happened today. So this could easily happen again tomorrow. So just keep that in mind. And you can see everybody, right? Everybody was ready to party on that pullback, right? That 1, 2, 3, and that pullback. Now, obviously, you had to have the trend line there first, didn't pull back, right? It goes up, trend line there, that one finally pulls back. So you just got to keep on making that channel work, and then once it pulls back, grab the pullback. So that's the pattern here, right? Up, pull back, jump, mark up that high, mark up that low. And then again, there are a lot of different entry setups. I don't trade off a 2000 tick chart, right? We use a faster time frame, like a 512, like a 618 tick chart. We'll be zoomed in to find the entry patterns off the low of that channel. And again, without sounding a broken record here, I go into all the details of those entry patterns in that free trading class, right? So make sure you grab that. So now we know how to buy it as it's going higher. Can I sell this thing? I can, but just like the S&P, what's my concern? Momentum, right? If I ask myself, do I have location? Yeah, this is a great place to get short, right? It's at a measured move, a major top, great place to get short. But I'm walking in front of a freight train, right? Momentum is very strong. So how do I get over that? I let the buyers try a couple times. Let them try once, let them try twice. And because this market is so poised for bulls right now, I definitely want that trap, right? 1 and 2. When I'm going so much against that trend, I want that trap, right? As opposed to if the market was to run lower, right? Like I mentioned earlier, if the market was to run lower and really collapse lower, okay, now location, momentum, right? What's my problem? Location is great, right? It's a great area of support. The range overhead is a magnet. What's my problem though? The Momo, right? Momentum's the problem. Now, are we a bear market right now on oil? No, we're an overall bull market. So because of that, I don't need that very specific crown reversal as long as I can just get the bears trying once, trying twice. Again, do I get that trend line to be a buyer off of? Sometimes we don't. Sometimes that trend line, sometimes it goes like this, right? Where it comes down, comes up like this. Sometimes we don't get that trend line, and all we can do is buy into those stop losses, right? Again, let that short squeeze, right? The same reason why GameStop went to a gajillion was because the people who were caught short in that stock, right? They had to get out, and the only way to get out is to buy their way out. And when everyone's buying, and you're trying to get out of your short position, right? You're not going to get out at your entry price. You're going to get filled way up here, and that's what makes that thing just light up like a Christmas tree, and it runs up with that short covering rally or that short squeeze. So again, the key here is if we do rotate all the way down, just be aware. Let those bears try a couple times. I want to buy, but again, my momentum is my concern. And then if we can hold, right? If we run lower, and we can hold that pullback and jam lower now, what is that? That's a reversal. That's a breakout, right? I'm not going to sell that first pullback. That will be a little bit, well, that'd be trade account suicide, right? It'd be like selling this one. We're not enough of a bear market yet. But if I can hold that pullback and run, I can mark that low, mark that high, and I can look for that. Again, first test is always the best test. I'm looking for buyer failures. I'm looking for bull traps. I'm looking for bear pullbacks, right? Coming off of the top of that channel. And again, I go over a lot more details of those specific entry setups as part of the free trading class. All right, guys, so make sure you grab that if you want more details on that. And I'm sure, again, as always, I'm sure there's going to be something I missed tonight, but that's why we have our trade room opened up every morning to trade together at 8 o'clock Eastern time. So if you don't want to do this alone, right, if you're having trouble with bad habits, if you haven't been able to get consistency in your trading yet, our trade room is a fantastic place to come out and trade with us every morning. My job out there is to make sure you know where the best setups are, break those bad habits, and get that confidence and consistency back in your trading. Let's keep it going, though. How about some gold? How about some gold here, shall we? Wrapping things up on the yellow metal. As I mentioned in the introduction, we have, kind of the same song and dance here as we had in last night's newsletter. It is a bear market into a trading range. What do we do in a bear market with a range? We find levels of resistance overhead, and we sell the pops. What do we use for the entry pattern? We use failure patterns, right? We wait for the price to come up. We wait for those poor buyers to try to buy the pullback, and we use their stops as fuel, and we sell into those stop losses. And that's exactly what we've been doing, for the last 24 hours here, right, on the gold. Every time it pops up, get up to a level of resistance and sell back down again. This is the plan from yesterday. So if somebody asked me what's going on with gold right now, I would say we're bearish. We're in a range. Sellers keep shorting those pops. Sellers would love to keep selling at resistance overhead. Sellers would also be interested if we can break through these lows here, right? I've got another space down, another big wide open space here, down to that 1804.8. Some nice open space down there. The problem will be, of course, we've got that pop above the range today. That creates that pendulum swing, right? What do buyers want to do? I'll tell you, buyers have a great shot right now to buy with a reversal off the low, right? Got some support levels down here, 1 leg, 2 leg, 3 leg. You got your pendulum swing, your measured move down here. There might even be a trend line down there as well. So I would have no problem being a buyer down there with the right setup, of course. And then as you can imagine, right, to be a buyer going higher here, the weekend gap is acting as a magnet, right? A 1, 2, 3 breakout, 1, 2, 3 reversal is what these buyers are going to be looking for. Now, this is going to sound a little bit like the S&P. We have a range. We saw some great shots to sell above the range today. We should be finishing this rotation, right? We should be finishing that rotation. If the market makes a run back up to these areas now, that means what? At least in my eyes, it means we've failed rotation. We should be making a pretty good push down at least into this measured move here. So you got to really be careful here if the market does poke itself higher here. So what if we go higher here, right? What if we go higher here? A couple things I'm watching. I've got trend line there. I've got trend line way up here. Now, as you can imagine, if we run up to that first one, this is not going to be that big of a problem. Again, ask those important questions. How's my location? How's my momentum? Location, great. We're at a level of resistance overhead. Momentum, not a big deal at that point. I can wait for the buyers to come in, try to get long, right? And I can sell into those stop losses. It'll look a lot like this one and that one. Just make sure we stay above the range, right? Stay above the range. But now let's think about the bigger one up here, right? Now we go way, way up, right? Now we go way up around these highs, right? We get up around the weekend gap now. Okay, now how's my location? Great, right? I mean, fantastic location, but hold on, momentum is the problem now. Okay, are we a bull market or a bear market? No, we're a bear market. So because of that, as long as I can get these buyers to try once, try twice, right? Remember, sell into stop losses, sell that trend line coming down overhead. And then remember, again, I don't want to overcomplicate it too much, but think about a trap on the way back down to those lows here, right? We're shorting the resistance trend line, we're shorting the stops, and we're shorting that trap, again, on the way back down into that trading range. Whatever you do, don't take that trap setup inside the range. All right, stay away from that. Ranges are where good trades go to die. We don't want to make that mistake. As you can imagine, too, as the market runs up, the buyers may finally get their act together. Maybe we hear about some stimulus deal tomorrow morning. You know what I mean? They talked about earlier this week, the Senate here in the U.S. is trying to get this, $1,400 paychecks, $1.9 trillion stimulus bill passed. Do they have it tomorrow, right? Do we come out tomorrow at, 8:45, 9:15 and say, oh, they're going to pass, or they're putting the stimulus bill through? That happens. All of a sudden, gold takes off, right? 1, 2, 3, reversal. Mark that high, mark that low. First test is the best test, right? Or it's 8:45 tomorrow, 20 minutes after gold opens up. Oh shoot, right? The stimulus bill is good, looks good. The market jams higher, right? Runs higher. Do you chase it? No way. Wait for that shallow pullback, that higher high, right? And you trap them, right? Trap. So if we can get enough, again, I think that will probably be the fuse that gets lit, right? It'll be stimulus most likely, because when they inject another 1.2, whatever the huge number is right now, whatever that huge number is, it will likely send gold running higher here. If it doesn't, that will be a very interesting topic for tomorrow night's newsletter. Where do we think these buyers want to go? Because honestly, if they talk about stimulus tomorrow, that range, 1866, that is a hell of a big move here, and that could evaporate, right? That move could happen in an hour tomorrow if we get some headlines regarding stimulus, right? So if we do get a jump up, pull back to the moving average, jump, I'm marking that, right? Marking that high, marking that low. First test is the best test. Second test is a trap. We'll talk about this tomorrow, of course, in the trade room, right? Second test is that trap. Buying the first test, pull back. Buying the second test, trap, right? Traps are better later on in the move. And if you have a contract to leave, if you trade on a bigger position size, leave that runner to finish up that move. So a couple setups there, either 2 try breakouts or 1, 2, 3 breakouts, right, as this thing rips higher here. Stay out of the middle as always, right? Stay out of that middle. Okay, as the market goes lower, can I buy this thing? Well, again, momentum is a problem. Great location. If I go lower here, fantastic location. But momentum's a problem. Is this a bull market or a bear market? It's a bear market. Knowing it's a bear market, I've got to look for a reversal pattern. 1 try for the bears, 2 try for the bears. Back up we go. I would love that pattern, right? But I'm not going to force it. I'm definitely not going to force it until we actually get that set up. Very, very popular setup in our trade. Love these, right? Love these. In fact, these crown reversals are in that category of, if it looks like a duck and sounds like a duck, it's probably going to act like a duck. So just take it. It's a very high probability trade when it's taken around major turning points, at a major low, at a measured move like this, at a pendulum swing. All right. I do want that trap low just because it is a reversal. Okay. That'd be the way to buy it as it goes lower. The one thing you got to worry about as it's going lower to sell it is this pendulum swing. You'll be surprised how well these pendulum swings hold up. They really do. So major support at that 1823. I'm going to want to see it go down. I'm going to want to see it pull back and hold. And I realize this is probably a little more conservative, right, than I would normally get. I'll normally get pretty aggressive when I'm going with the trend. You know what I mean? I'll usually, if I can get a strong enough breakdown, I'll sell that pullback right off a channel top up there. I worry though. This 32.5, it's a major low, and if you look back in time, there's a big range low back there too. So this place is no joke. It's a very big support area here. So I'm gonna want to see that 1, 2, 3. Show me some proof. Show me you really mean it. Once we get that 1, 2, 3 breakout, then I'll feel much better at getting short off the top of that channel, right? There are times to get aggressive. There are times to be better safe than sorry. I do feel this is one of those right now, especially with stimulus lingering right now. People may be trying to buy those bottoms here. So it's 1, 2, 3 breakout. First test is the best test. Second test, a trap. And we know where the market wants to go, 1804.8. All right, guys. So we got a pretty good plan for tomorrow. I feel pretty jazzed up for tomorrow's Thursday trading session. I hope I will see you there, right there with me. Don't forget to grab the free trading course. And if you want to take a shortcut and come join me in the trade room tomorrow morning, I would love to have you there, right there with us. My job in our trade room is to help you get your confidence back, right? Get that consistency in your trading. Break those bad habits. I know, they're tough. And I'll tell you, I have a great, simple checklist to follow, a simple set of rules, a bunch of really simple setups to use, and some really good coaching along the way. I've got a link for you guys to get registered for our morning trading session in the description of this YouTube video. So grab that link. Don't be afraid to call the office. Right? Don't let my ugly mug deter you from calling the office, right? I promise I won't bite, but definitely call the office if you have any questions. Use the live chat on the left, the live chat on the right. I'd be more than happy to answer all your questions and help you get registered. We get a bunch of bonuses, bunch of specials going on right now, some nice flexible payment options for our lifetime trade room membership. So definitely don't be shy. I will be here to help out every step of the process. I hope by now you've subscribed to our YouTube channel because as you can see, I am not messing around on this video newsletter, getting us ready for the following day. Hit that thumbs up button for me. Drop those questions in the comment section for me and come back and see us again sometime soon. That's it for me tonight. My name is Joseph. Be well out there. Be nice to each other, will ya? And I'll see you guys tomorrow. Adios, amigos. Bye-bye for now.